What's happening, guys? It is Super Bowl Sunday. I tried to get this out as early as possible, and that way you can kind of get prepared ahead of time because I know nobody's going to be looking at stocks, nobody's going to be looking at scans at all tonight. And even if you don't like football, you'll probably be watching the commercials and, come to Monday very, very underprepared. So my goal was to get it out as soon as possible because at the same time, that means my work's done, right? So I did all the scan and research and everything like that on Saturday. I'm ready to go. I can enjoy the game tomorrow night and still be very prepared for Monday. We've got some crazy action over the last couple weeks. Very timely video last Sunday as far as going over sectors. I was giving examples of different sectors that were extremely hot. I forgot to talk about shippers. Shippers was another great big range, very high volume, high liquidity type of sector trade. There was a bunch of other ones, just like Bitcoin type names, everything that was related to any partnerships with Ripple and other cryptocurrencies. There was a time where all of those went straight up, like RIOT, if you guys remember that one, among many others, including Overstock. And then there was the marijuana craze. So anything related to that, IGC was the standout as far as a stock continually being able to raise and screw shorts at the same time. So those are the prime examples of what sector trading is all about. And as you saw this week, and why I said it was timely is because it mattered. It doesn't matter what the companies do. All that matters is if they get thrown into this basket, then that's it. They are now, every headline that comes out, if this one goes, that one goes, that one goes, that one goes. If this one starts up and the others aren't moving, the other ones might go. So it's really about understanding which ones are relatively weak versus the peers or relatively strong versus the peers. You started to see NNVC was actually holding up relatively well while some of the other ones were fading off. And then you found out, well, maybe they had a plan. They put out a PR that next night and, the squeeze was on. So I think that, you need to be very, very careful, especially buying headlines at this point. For me, it's what does the stock do? How does it react to current headlines and things like that? Before you go back a week and a half, as long as you were quick on the headline, it was chase all the headlines. Anything negative about the coronavirus, it was, faster you were, faster you made money. But now we're at the point where it's kind of to be expected at this point. We're expecting something in the U.S. We're expecting something, Florida, maybe California, Texas, Chicago. It's not going to surprise people. So each time that these things start to come out, it's having less and less of an impact on the buy programs that hit right away. So that's some of the notes that I took last week, and we'll see what happens this week. And I'm assuming that over the weekend we're going to have more and more cases. Maybe we get some bids, maybe we get some more scare, but at this point, it's not early in the game. But if it continually gets worse, then we might have that secondary leg and squeeze everybody out. So on scan tonight, I do have some of the lower float ones that are actually holding trend. So the thing is some of these 3 million share floats and less, 2 or 3 million. These are the ones that could potentially outperform because there's no reason for them to be running in the first place. They just weaseled their way into getting the headline, and they're taking advantage of that. But if there's too many shorts, because there is zero reason for them to be running, so the shorts are not technically wrong. But if the sector stays hot, they're going to get ran over. So anyway, I hope the last scan was good for you guys and being able to relate it back to those, just like the Bitcoin craze, the pot craze, as well as shippers. So other than that, this January was fantastic. This was actually my best January ever. And I wrote it in Scan on Thursday night, but I needed to put the brakes on a little bit and just make sure that I am doing A+ type setups, because not because I had lost or anything like that. Whenever I have a hot run, it's always go, 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 go until I slip up, I do something dumb, I take a low quality play, or I push too hard on a low quality play, and I forget to check in with the dial that we talk about. Checking in with, where's my risk? Is it too high, too low? Where is my size too high, too low? And if you're always rechecking in with that dial, then you're going to continually make sure that yes, size is right, yes, play is still doing what I'm expecting, yes, the idea is kind of unfolding in the manner that it should. And if any of those check marks are not, or if any of those dials are off, then you should potentially start to size down. And sometimes when we're trading really, really well, we forget to go back and do our checks and balances. And then it's until you're sized up on some stupid play. You got 20, 30,000 shares at 11, 12 bucks, and they do an offering at $5, and you're like, well, there goes my hot run, right? So it's always important to remember to know what you own. And, there was a couple of those this past week and a week and a half ago. I warned about NNVC before it dropped 60% on the offering. I warned about a few other ones. It does not mean that they're going to raise, but in the off chance that they do, you're going to be happy that you were not in the trade. And the idea is that, I'd rather wish that I was in the trade than wish that I wasn't, right? And, you can even go back, PSTV, a long time ago. It was a stock that was, ramping up, had a great move, and a lot of people were trading it. And it was at like 10 or 11 bucks. They ended up raising at $5, I think, with warrants, something like that, and it ended up going down to 350. And there was no way out. They didn't halt it for the offering or anything. It was intraday. And when that happened, it went straight into circuit halts down. And, if you can imagine losing, $9 a share, $7, $8, $9 a share, well, actually almost $10 a share. It's not good. And, no matter the size, even if it's 1,000, 2,000, 3,000, whatever, it's a big one. So that's why I always warn. It's never to bash or because I'm upside down and I want, I would never want to crowd a stock that I'm in anyway, right? That doesn't do you any good. But my goal is just to help one person, and if I do, then good, goal done, goal achieved. So, and as you saw last week, the probably 3 out of the 4 that I warned on ended up getting hit pretty hard, including SNCA and a few others. So this week we've got some good stuff. Let me see if there was anything else I wanted to talk about. So yeah, so the notes that I had on Scan on Thursday were basically on Friday, my goal was just kind of recheck in and make sure that I am, taking A+ setups and I'm not getting too aggressive, because, I started to trade GE, I started to trade Tesla, I had a nice Amazon trade. They were all great, but it's getting away from what I'm really good at, and I could nail 9 of those, and I know that 10th trade is going to take all those gains back if I continue trading that stuff, the Teslas and all that kind of stuff. So despite having okay trades, having good stuff, I just felt like I was outsized. GE, I had way too much size and risk for the trade that I was, or the price action, right? I was, I probably made like 5 cents overall on it. But had it ramped up, was I prepared for that? I probably had too much size. So that was my point. I kind of rechecked in, rezoned, regrounded myself, and I put the brakes on. So anyway, that was that. But amazing January. But January's done. February starts, and we need to focus. We need to, like I've tweeted before, you got to act like you've been there before. I had a member had his best couple weeks ever, more than he made like last year. And, I reminded him the same thing, because it's so easy to, just make decisions based off what you just made. And all of a sudden it's gone, right? You have a 10 or 20, 30K padding, and all of a sudden you're like, 5K doesn't matter. Then 5K turns into 10K. And then you end up getting out of that potentially, and then you got to try to make it back. And it's just always the downward spiral that everybody goes through. So make sure that you stay grounded after some good gains, and because if you don't, the market always humbles you. And secondly, obviously the market pulled back on Friday, and oh man, we're back to like last week's level. But people look at it down 650 points or whatever it was, and they get all nervous. But we've been up quite a bit. But the part that I want to warn you or make you aware of is pull up LK, right? LK was a Muddy Waters research piece that they had put out, and then Citron ended up coming out with kind of the we don't agree, we're long. And the range was insane. And I think it was, it went from 37 to 27, right? So, nice opportunity for sure. But if you're trying to catch the bottom, and this is the point that I wanted to make with the market pulling back, I'm not trying to put fear out there. We're going down, we're going to crash, and all that kind of stuff. We may not. We might be back to highs next week at this rate. That's how it works usually. But just be prepared for these outlier moves. When the market gets a little, sketchy like this, sometimes they just pull the bid. Sometimes they just walk. And, this LK, 37 to 27 can make you owe money to your broker, if you're not careful. And everybody will say, I'm only using so much size, et cetera, et cetera. But then what happens is you get in 35, then you get in 34, you average in a little bit. Now all of a sudden you're on margin, and it goes another $5 against you that you weren't expecting, and you're 4 or 5 times your size. That's how you get hurt. So be aware that we potentially are entering in a market where buying dips may not work. And again, I may eat my words next week, and we're back on 52-week highs on the market. But who knows? Who really knows? So either way. Let's embrace the volatility, embrace the range that we have, and just trade smart. And I think the two easiest ways to avoid disasters like LK is three ways. One is avoid, totally. Cash is fine. 2, if you're familiar with trading, if you've been doing it a long time, if you're not a new trader, if you're consistent, if you know how to get out of situations, if you know price action when you get in something and it doesn't act like you were expecting it to get out. If that's you, then washouts. Washouts is the only edge, in my opinion, on a trade like this. It's still risky. It's no different than a parabolic, where you're trying to find the top, not necessarily the top, but after the blow-off move, right? And same thing with a washout. After the washout, might start to pick up the pieces on the dip. Though that's, in my opinion, the only edge in trading that. Otherwise, the third way is let it wash out. And, I'll go over this again. But if you look at the LK chart at 12:15, where it flushed out, came back up, higher low, came back up, higher low, and it starts to form a base, you now have an educated risk to use to let this trade work for you. So those are the only 3 ways that I would trade. And one of those ways is not trading at all. So there's really only 2 ways. Be cautious, be safe, and let's get right into scan for this week. BIMI. BIMI was fantastic. Whether or not I really expected it to go this much, I don't know, but I did have that kind of spider sense feeling that we were going. I got long on the on the move over here, right when it broke 350 here. Great setup. Nice little ABCD setup and risk versus VWAP. And very, very clean setup. And then it started to launch. So I joined that trend. And then I started to join and add throughout the day. And from the idea, it was a quick 70 cents to $1 up. And I told the room, I was like, listen, if you're building an account, you should probably be locking in. However, I am holding. I'm looking for a much bigger trade here. I am looking to scale in. I am looking to size and risk to my entry. Even though that first move was big, today just felt different. And sometimes when that happens, you might get that great move and that great secondary breakout, and then you end up overstaying. So you have to be able to recognize, when they're still in control and when they've walked. And so anyway, I only had buys on Friday. I'm still there. Whether or not that's the smart decision, we'll see. But it did ramp up. So maybe we get a little 550, 570, 580 gap. If we do, it's probably game on. We might be going 6s, 7s, 8s, just like before. Again, this is a former runner. It has ran from basically $1.50 all the way up to 12 or so before. So it's no stranger to squeezes, and it just felt a little bit different on Friday. So hopefully we have some better action, some more action on Monday. And one thing I forgot to mention, for those of you guys that did watch the video last week, CBLI was the last 2 Sundays was a swing idea. That I saw a buyer in the tape. We were talking about it. I was going over the wicks and the reason why I was interested. And, obviously this week has been insane. So, take all of that out. It's very hard to see now because of that prior price action. Let me make it a little bit cleaner. But we talked about these wicks. And I had mentioned right over here how the wicks were holding, buyer in the tape. They kept on closing it up higher and higher. And I had suggested that if it holds over $1 for about 5 more days, then we probably get a regains compliance PR. And, that was not that is a big to do, but, people do react to it in this market. So anyway, they ended up getting into the whole virus sector, if you will, and they are now one of the ones that moves with everything. So that was up 200% right off of so Sunday scan, and then it was Monday. It was running up 200 and something percent. And then the other one, the big standout, I forgot to go over at the start of this, was I loved it for an unwind. I felt like the crash was coming. It was imminent. And I liked shorts for a flush under 5. We didn't just get a flush under 5 or 4 or 3. It went all the way down to 270s or so, 260s, 270s. So major unwind, down about 65% from that idea. So I hope some of you guys were able to take advantage of that. I think we're going to have another opportunity soon on that, but I'll get into that one. LK is... So I've separated scan. I've got a lot of great feedback from everybody, the way that I've been categorizing. So I did main watches. So as you can see, some people might say, oh my gosh, there's too many to watch. That's fine. My goal is never to watch that many. My goal is just to be familiar with them, like I talk about every single time. I have 4 main watches. That's it. 4 main watches. And I'm going to find out what else is added and subtracted on Monday morning, right? So I'm prepared for 4 names. And I might trade 2 of them, and I might add another 1 or 2 based on, whatever news hits on Monday. So LK, this one, you can see it's kind of been sideways, nice consolidation, basically held around 32 for most of the day. I am looking to trade off the open, reactive trade, nail it, move on. When I trade off the open and nail that trade and then don't move on, right? So when I say it rips up, I short it, flushes out. If I sit there and I'm like, this could be a really big trade. Maybe I'll add some. 3 minutes later, it swipes back the other way. Not only do I not have a gain, now I've got a loss. So if I trade it reactively, I need to also cover it reactively. If I short it reactively, I need to cover it reactively. And that could be by having some wish orders out there ready to go. The only way that I got those flush covers over here on the chart that I posted this weekend is because I was prepared. I was there. And one of the problems that I have, I'm a stubborn trader. And when it flushed out like that, there's a good chance that I would have said, all right, I was right. Let's see if it unwinds a little bit more. And by the time that I think about that, it's already 50 cents up. And that's a pretty big swing. So, LK, reactive trade. I don't mind going long either. But ideally, we get some type of gap up, 50, 70 cents, and then maybe a fade off. But I do think this chart's broken for a little bit. I think they need to, even if the company responds, ideally gaps up, and if it stays heavy, I think we can still get an unwind. Despite how far it's come in, I think a lot of folks are actually on the long side and wrong. Even if shorts hammered it, even if they're in there, I just think that based off, it just raised, it just had that huge move. There's a lot of people down a lot right here. So if they did average down and try to better their position, they are about to, look for their exits any chance that they get when it starts to rebound. Next trade would be AIMT, which I think Fast Money popped it pretty nicely after hours. It should not be up. It was expected. It should not be up like this, but I'm not complaining. Higher the better. I thought about it after hours. I thought about leaning on it, but I thought about leaning in on it over here. And once again, I was happy to not be in the trade. I'd rather wish that I was in a trade than wish I wasn't. And that would have been a case where I wish that I was not in the trade. So, there's no reason to be trading it after hours. There's going to be plenty of opportunity on Monday. And this is the type that very well may unwind and go red, especially when it's expected a lot of times. You see some crazy candles. And this is no stranger to that. We've had this gap up day, unwinds, flushes out. Over here, same thing. Ramps up, comes down, flushes out, all of a sudden comes all the way back, and here we are again. So, this is a bailout for everybody that might have been stuck the last month with, these crazy candles. And it might be another liquidation opportunity for anybody that's looking to sell. So, we'll see. With that said, a lot of people are saying it was expected. A lot of people are short biased. A lot of people do not think it should be up. So if it holds and it starts to base and it starts to go, where the crowd is. So be aware of that. VXRT, this one joined the virus game as well. This one's been running up nicely. It's, from low. A lot of these types that come up from 20, 30, 50 cents, people feel more comfortable playing larger and larger and larger. They end up, trading myself as well. But, normally say something at this price range, I might trade 10 or 15,000 shares, hypothetically. But in this range, in price range, I'm comfortable trading, say 50, 60, 80, 100,000 shares. So, when it starts to catch, when it starts to go, if it ramps up 30, 40, 50 cents, all of a sudden it's a different ball game. People weren't really expecting it because it was so thick before. Now it's thin. They've oversized. And sometimes we get some crazy action. So, with that said, higher the better. Ideally, it opens up 150, rips to 170. Again, it's going to really depend on what the sector does. But for me, reactive trade, cheap borrow should be a great opportunity. This is a situation where you don't want to pre-exhaust yourself. I talk about that a lot, right? We all want to find the top, but there's going to be so much range here. There's going to be so much opportunity that it's not about getting the top. I'd rather be, 5-10 cents late to the 40-50 cent move than being 30, 40, 50 cents too early. So keep that in mind. you don't need to step in front. Wait for that A plus setup, and it very well may set up in that manner. A couple other ones. MAXR is up on news after hours. This has been a short idea over here in the 20s. We've been talking about it for about 2 weeks now on Scan. I've been watching it since, for about a month or two. This is why we stay familiar with these names. But I kind of think that the news after hours will be a crutch for them to maybe sell once again. It's been kind of coming down, so I think gap up, maybe a push off the open, and I'd just be looking to kind of join that trend back down. So there's that. And the KPTI, similar idea. This was another idea late December, early Jan, around this push, and then it's been on the last few Sunday scans as well as scans, pretty much every night, where I want to just be trading strength for fades until it doesn't work. As long as it's under VWAP and you're kind of using that as your risk. Pretty self-explanatory at this point. Same thought process last Sunday and all week. I liked it for a flush under 5. At this point, I think we could potentially come back and try to fill this gap. That would be ideal. Maybe 370, 380s push, and then hopefully people get too aggressive and we get that 420 pop, but I would love to fade this again. And I do think we're going to get that opportunity. There are so many people that were long. There's so many people that averaged down. There's so many people that added over here. And then there was so many people that bought this day. There was also a headline that came across, and it was actually pretty strong for most of the day, and then bam, came in like crazy. So this is a situation where everybody's on the wrong side, and every rebound is going to be seen as an opportunity to get out. So I'm going to be cautiously looking to fade it off any big moves. The next section is sector trades. And by the way, the last 3 that I just went over, I put it under the section failed follow through momentum. So basically I'm looking for some momentum, and then for it to fail to follow through. So essentially I'm looking to kind of join that trend with VWAP as a guide or prior resistance as a guide. I'm not trying to find the top. I'm looking to let it exhaust itself and then join. So sector trades, NNVC. NNVC was fantastic. A lot of opportunities here. I felt very good about shorting the gap on Friday. I did. I dabbled a little bit relatively early just in case it didn't do anything. But I was expecting maybe a push to 20 or 22. That's kind of what, in my mind, I was waiting for. So I ended up scaling in and shorting, and I kind of added throughout the day on all pops, and I was up massively here, over here, and from pre-market, I never went red, but my P&L swung way too much. I could have done a lot better job at taking profits down here. Problem is when I size into something and the tape is staying heavy and whatnot, I like to let it work, and sometimes that's good. Sometimes it can be an overstay. In this particular time, I ended up keeping about 1/3 of what I was up, and I could have been trading around all day, but I decided I was going to try to let this thing unwind. And I also thought that it was going to unwind after hours as well, but I covered at the bell just because I don't want any funny business. It was a good day. There's no reason to be, screwing around with this stuff. And for some, it's a great hold. It's a great opportunity. But for me, I know my strengths. I know my weaknesses. So I'd rather just day trade this thing. But I was surprised the shares were cheap. There was plenty of them. And, you can see that there is a seller right here. Draw a line across at 18, 1780s, 18. And that's pretty much, the kind of things that I look for. And you look left and you can see where there's been a lot of volume that's gone off and where there's been an issue. The difficulty with this trade is there's just so many newsletters, and newsletters were getting long, a couple of them, and they actually do have power, and normally, not these types of trades, but normally it's just a pop and a drop. But the problem is a lot of people like to fade those newsletters, and when you get too aggressive, you end up shorting, covering, shorting the weakness, covering. So my goal was just to keep one solid good average and let it go. And like I said, I was up about 3 times what I ended up making, but it's that's okay. Plenty of other trades out there. CBLI, same thing. It's I'm looking for either these things to stay connected with the sector trades, relative strength, relative weakness, whatever it may be, or break away. And once they break away, you're going to have these CBLI, LLIT, even AHPI. You're going to have all of these trades as opportunities. But it's up to you to kind of decipher whether or not they're stronger than the rest of them or weaker. And as they're starting to break off, that's kind of where your edge is. Don't forget about them. Set price alerts. When other people forget about them, there's going to be big opportunity. Everybody's just looking at NNVC, NVAX, INO, APT, but there's 10 or 12 other ones. And when these things either break out, people are going to be looking for the other ones to potentially join, or when they start to break down, they're going to forget about these. And there's going to be an opportunity there, lower volume, to let it work for you. Just like MGen. MGen on Friday was a great trade for me. My goal was just a quiet trade. I obviously shorted. I posted this trade as well, but I shorted it this day. It was great all day. But the next day, my goal was short into the 210s. Any pre-market strength. Quiet trade. Nobody's really watching it. Everybody's all excited about NNVC and other stuff. Nice little fade, ends up closing the low of days. So much lower risk. You don't have to deal with the up, down, fighting, all that kind of stuff. But on that note, CODX is a prime example of making sure that you are trading within your limits and make sure that you're sized in properly, because you know what? This thing was checking all the boxes, failing, VWAP stuff, fading off. Then all of a sudden they drop a PR. These companies are professional short trappers lately, and they're all just penny stock promotions at the end of the day. It's no different than OTCs back in the day. All these companies that are putting out PRs right now are penny stock promotions, essentially. So be aware of that. In the end, it's obviously going to end badly, but for now, their goal is to stay in the news, stay mattering. They want to matter in this, and so they're going to continue to put out any PRs they can. You saw a couple companies. APT is another one that I'm interested. I like this one the best, but you can see right here there's a big seller, 680, 690s. One top, two top, three top. So if we end up breaking through that level and consolidating, holding over it, we might have a nice squeeze. But flashback to my point before is companies are doing anything. They're even donating 1.5 million masks or 1.5 million dollars to the coronavirus or whatever, because they know they're going to get millions and millions of dollars of liquidity in their stock, and that's all they care about. So be aware of that. So anyway, that's the sectors, or at least the coronavirus sector names that I'm interested in. There's a lot more. I have a whole list, but you guys should know them by now. AEMD, you can see the wicks. We talk about this. So just like the CBLI idea, these guys raised, but nobody cared. They keep on buying it up, and you can see there's support every day. It dips and gets bought up. So this is the same chart that I went over earlier on CBLI, right? So ideally we get some type of blow off move. Everybody's probably still short, trying to find the top. But what I compared it to in Scan was both LK where they also did a race, and then they squeezed out, and then once everybody got squeezed out and people forgot about it, unwound. And then the other one was Trill, Tril, where it was breaking out. They ended up raising, and everybody's trying to find the top. And as soon as everybody gets exhausted of it, guess what? It pulls in a little bit. So AMD, I am watching. I'm interested. We're coming into some resistance over here. Not that there was a lot of volume, maybe just this day. So if we start to get over fives, 510, 550, those are some key levels there. If it has trouble, if it starts to fade, if it holds under VWAP, then I'm interested. But I want all these people that are trying to find the top to get exhausted, and then we'll have the trade. Other than that, CPHI, again, Wix, you guys should be familiar with this. I started in this week just small, very small. I need to do the fundamental / catalyst research on this. I don't know anything about it yet, but I saw it on scan the last couple days, and I put on a few because I did not want to forget about it. And once again, it's on scan so that I don't forget about it. So that was that. CLSD, put on a swing earlier this week. Again, I felt like this was like Trill. Felt like we were in maybe this area of Trill, so that's why I had put it on when I said I did in the room. And last but not least, Cheapy, BKYI. I had been, there was a buyer in here this first day with the volume, came back, consolidated, and started to break through that 65 level. So it interested me. I put some on. I had very, very minimal, but I had added some when it busted through this prior, looking left, because I had that small entry and because I was interested in it from scan. I put it on. It ripped to $1 that day. And so my average was under 70s, and it was exciting. It went to 98 cents, 99 cents or something like that, but I thought about locking some in, but I was like, you know what, I'm just gonna let it work. So I have a position there. Maybe they'll have fun with it, maybe not. I need to see more confirmation of trend, and you can kind of see, probably need to see 85 base, 87, 88 base, and then go. But for now, you should assume that it's going to fail every time it goes to 90. That'll keep you safe with size. But again, I've got a little bit of a padding, so we'll see what happens. So again, just to wrap up, BIMI, that's my main watch, and hopefully we get some type of gap and some crazy moves. Hopefully shorts got in there on Friday. We'll see. LK, reactive trade. AIMT, as I said, after hours, it was pretty nutty. I'd love to fade it, but that's everybody's thought. So number one, you need to see it prove itself, or number two, remember, the crowd is short or wants to short, so if it starts to go, you know where it's going. And then last but not least, VXRT. So that is that. And I've got to go over here and pick a winner from last week, and we'll go with Rodrigo. So Rodrigo, you can hit me up. I will ping you now, and I will be shipping everything out again. Like I said last Sunday, typically I try to ship out everything once a month. I had just gone that last week, so it'll be probably a week or two, but send you a t-shirt, and otherwise enjoy the Super Bowl tonight. Hopefully your team wins. Unfortunately, I don't have a team in there. I'm not leaning one side or the other. I just want a really, really good game, and I think a lot of the playoffs had some great games. I don't typically watch all the games. Usually just watch the Patriots. So it was interesting to see some of these other teams and how good some of the players were. So, all right. That's about it. We'll see you guys in the room. If you guys have any questions about the chat room, reach out below in the comments section. If you guys have any questions about things that I've said, reach out. I think we're going to try to do a survey soon in the room, just get some feedback on features and things like that. We've we're adding features every single day. You know, and as I've said before, the beauty of kind of having your own software, your own chat room, your own everything that you've built from scratch is you can do whatever you want to do. So price alerts has been such a big thing, but we're adding notes, we're adding different types of reminders. We've got all kinds of IPO type things, and it's been very, very helpful. So hopefully you guys like it. We are always taking member feedback and turning it into new ideas a lot of the times. So we always appreciate that. So again, we'll see you guys in the room. Any questions, always leave them below. And last but not least, as always, we always pick a winner for a t-shirt, Momo Traders book, or once a month we do a month of chat. And that's done by doing a thumbs up and also putting a comment, your biggest takeaway from this video below. All right, guys. See you later.